Hey guys, welcome to the channel, The Blackjack Trading. So in today's video, we are going to do a smart money analysis, or you can say a backtesting video or decoding the trades in which we have done in the past videos as well. And you guys have liked it so much that I have to, I'm actually making new videos for you so that you can understand and decode the smart money in the real sense and decode the smart money in the real sense. So what is happening over here and how we can take the trades and how can we identify the opportunities. So we are going to discuss in this video. In these trends, there are some hidden opportunities in the market which we are going to decode today, from where you should take the trade, from where you can actually put the stop loss, and you can put up the target in the market. Okay guys, so let's start, and let's choose any random day. Okay, any random day on this trading view. So let's start from here anywhere. Now what we are going to do, we are going to decode some trades. So yesterday we took a very trending market. So today what I'm going to do is going to take such consolidations, and I'm going to tell you how you can beat up the consolidation, or you can protect your stop losses while you are trading in the you can say while you're trading in the trend, and you come across with a good consolidation or long-term consolidation comes up. Okay, so while doing the analysis, we are going to start with the same points as I have been doing before as well. So we are going to delete all the previous drawings over here. So we have what we are going to do, we are going to mark a major support in this level. So this is the major support which I can see, and from here you can see that the prices are moving towards the upside. From this previous support, we are going to put up a vertical line over here, and we are going to analyze the previous market, not the next market. Okay, so from the previous market, we have to find where is a last major support that has been broken in the market. So here we can see that there is a huge support over here. There was a major support over here from where the price went up and created a lower low, or you can say broke the support and started moving towards the downside. So this can be regarded as the last breakout structure in the market. So now I can denote that this is how the price have moved in the past as well. So this was the major support again. This was lower high, lower low, lower high, and lower low. Now from this major support, what did happen when the new day started and I'm trying to trade in the market? What did happen? So let's look at the previous day. What did happen in the market? The price started moving towards the upside and created a new buy leg in the market, something over here, and created a new breaker structure from this major point over here. So price did what? Price actually broke this major structure or a breaker structure from here itself. In the just the opening candle itself, exactly at 7 p.m. or 9:15 of the Dow Jones Index, when the New York Stock Exchange opens up in the market, from there you can see that the price has started moving towards the upside. Now in here, what we can see is that the price actually created a good huge buy leg, and now we have to understand while going towards the upside, where is the next resistance that the price has created over here. So this is the major resistance that the price created towards the downside, and from here the price actually moved towards the upside in a panic momentum, or you can say in a momentum based entry. So now what had happened from here, the price created a major broke this previous major resistance, which can also be regarded as a breaker structure, and from here the price has started and creating a new resistance in the market. So till over here we were expecting the price will create a resistance, price will create a support, and from here the price will try to move towards the upside, but that didn't happen. So what had happened in the market, let's understand from here. Price started this major sell leg over here and actually started moving towards the downside in a good momentum, or in a, you can say, very healthy or a strong trend towards the downside only. And then finally you can see price created a simple or a very small support over here. Now when the price is in such a huge momentum, what we can do, we can take this small opportunity because the price is in a huge strength and it cannot be stopped from just one single support, and that even single support is breaking out. So this is where you can take your first entry in the market and put your stop loss on the swing high of the market, or the basically 70% of this wick size as a aggressive stop loss. From here you have to target your 1:3 in the market. So your 1:3 risk reward will be over here, which you can see, which we have targeted in there over here, and you've already achieved the target. Okay, before hitting the stop loss, you have already achieved the target over here. No doubt the price might try to come in your stop loss area, try to test it once, but do not you can say do not become coward, guys. While trading in the market, you have to be very much, it's very much important to be very very strengthful, because these markets does this, these markets try to you can say compete with your emotions, because when you see 2.9% of your trade has been gone, and then suddenly the price moves towards upside, and at this level exactly you want to break even, you want to switch your trade, or you want to start buying or do whatever. But I would suggest you control your emotions while that, because if it is not touched your stop loss, then you are still in the trade and you have to manage the trade as it was going. So either you can exit over here in the basically in the target area only, or only when the price touches the stop loss over here. Okay, so these are the major things that you have to remember while trading in the market. Okay, so from here what did happen, the price actually moved towards the downside, and you will see that the price created another major support from this level. Okay, from here you can see that the price started creating a new buy leg in the market. Now taking at the next opportunity, this was the previous opportunity that we have taken. Now from this level, what we can say, we have to understand and analyze if we can take any other opportunity. So price created a major support over here, also known as the breaker structure. From here what did happen in the market, the price started moving towards the downside only. actually price created a resistance and I started moving downside and break this major support over here. Now what you have to do is you have to find within this range of this major support and major resistance, you have to find whether you can achieve any opportunity or you can see any opportunity from where the price can go towards the downside. So what you need to do while while taking the entries, you have to look at the very internal structure that the price is trying to create. Price is trying to do this momentum, something like this and this and this. Okay, so this is the major momentum which the price has been doing. So as soon as the price gives us the first rejection in the market, so I have to look at the highs of the market and the lows of the market, where the high and the low has been taken out with the market. So over here, what I can see is this, this candle is a very good candle from where you can see that the price first went up and then went down, and we are going to take a trade from this candle, and we are going to put the stop loss, just above the high of the previous candle, and we are going to target 1:3 trade from here. So many guys, what they actually try to do is they try to take the entries from here or from here. But if you have a certain, entry pattern which you are very much confident on, always wait for that entry confirmation to be there, and then only take the trade. No matter how far it is from the major resistance or how far it is from the major support, if the price has to give, or if the price actually makes that entry pattern even in the lowest of the price, then there is a certain chance that it will try to go towards the downside only. Because if I would have taken the entry from here or from here, there is a high probability chance that the price would have created something like this and would have taken out my stop loss. So you need to be very much aware while taking the trades. You have to be very much confident on what you are doing, and what is your entry pattern and how should be you managing your trade. So price actually did what? Price actually broke this previous support again, and from here you can see that the price was trying to create a new support from this level. So what we can see is that the price is trying to create a new support, and the price is finally trying to move towards the upside. Now there's a very much important thing that you have to remember from here. You have to look at the high of this candle and you have to stretch it towards the upside, because this is your major chop, or you can say this is the major external liquidity point. So above this point rests the external liquidity, and below this point rests the external liquidity. Since the market structure was in downside, or the major direction was in downside, we expected that the price would create a resistance over here, and then the price will try to fall towards the downside. Let's see if that happens in the future or not. But before that, you have to look at what, while taking the entry towards the downside, as I told you, from this new resistance in the market, as you can see that the price created another resistance at this level before actually taking out the external liquidity. You have to start reading out the internal structure from this level. So what did happen from here? The price actually started creating something like this. Price went up, you can say a buy leg again, and then the price actually, broke this major support again. So since we are not breakout traders, we don't take breakouts straight from something like this. So there is no entry. Some people would try to enter over here, but this is a breakout entry pattern, guys. And the probability of this pattern, I'm telling you, is less than 50%. And that's why I don't use the breakout patterns. No doubt I would have waited for such an entry where I can see smaller pullbacks towards the downside, rather than taking out the huge breakout and pushing it towards downside. So this is the majority of the mindset that you have to create while trading in the market. Now looking at over here again, what did happen? The price started creating a new resistance again, and internally the price is creating some you can say internal market structure, something like this. The price created a huge lower high, lower low, and again a lower high. Okay, now you have to look at this point if you can get an entry from this level or not. So what we are looking for, we are looking at the internal structure again. What did happen? Price went down, and there was no pullback again. So from here there was no entry as such. There is no entry present in these two legs over here. So what did happen over here? Because of our concepts, we were able to manage, or you can say we were able to not take trades in the wrong direction in the market. Okay, so now when the price actually broke this major support, you have to look at a very interesting point, that this is a point where you have to observe in the market that this is something known as the sweep in the market, or the wick out. This is not a confirmation, or this is not a breakout. Look at this breakout and look at this breakout. What did happen, or what is the difference that you can see over here is, when this breakout happened in the market, when this support was taken out by the market, you can see that the red candle closed below this support line. However, when the price broke this support, what did happen? This red candle closed above the support line. So this is a majority difference that many people try to ignore, or they are not able to understand this point, that this is known as the continuation of the leg. That means the price is just sweeping up the liquidity from the downside and is not giving us a breakout again. So still now what is happening over here? They are only looking for a downside opportunity. That means this will be considered as a single leg, and this will not be considered as a lower high or a lower low, something like this. Okay, so you have to very much be clear with this concept, that sweep is only a part of something known as the extension of the buy leg or the sell leg, and not another thing as well. So from this point, what did happen? The price started creating another support, and the price started moving towards the upside. From here you can see that the price started moving above side, and then the price created towards the downside, again towards the upside, and sweep towards the upside again. So from here, what did happen? The price tried to create a major resistance at this point, but because it swept As you can see that the price has swept from this level to this level. So what are we looking for? We are looking that the resistance has been taken out and has been shifted towards this level. That means this will be regarded as a single leg in the market. Okay, this is your single leg in the market. So from this leg, what we have to look is that if we can see any downside direction, because the major trend is towards the downside, and you can see that the breakouts are happening towards the downside. The price is trying to create lower highs and lower lows. I am looking for something which is something like this. So I have to enter at this level. This is my another entry that I would have to be taken, because since the market structure is downside and the price is giving me a downside entry, I would have taken this entry like this. No doubt, I know in the future you can see that the price has not touched my target of 1:3. Since we know that all our trades are 1:3, the price actually went down, sweep this level again and then started moving back up again. And because of which you can see that the price tried to move towards in our target direction, but what did happen? It reversed from this level and started moving upside and taking out a stop loss. But these are the stop loss that you have to accept, because these are the stop loss. This was a very high probability trade, since the price was in the in the downside direction or the bearish direction. The price was internally creating lower highs and lower lows. That's why we took this trade towards the sell side. So while following the same setup, as you can see in the last three trades, we made one target, second target, and third would have been the stop loss in the market. Now let's continue the trading towards this consolidation, and I will tell you how to you can say pass through this consolidation. And if you want to learn more about these guys, do not hesitate to subscribe to this channel and contact me on our WhatsApp number. The WhatsApp number is given in the description. We also have started the live trading in the gold trading itself using these smart money concepts. So you can join our live trading and hit the bell icon so that you can get a notification whenever I'm live trading in the market. Okay, join the live and learn from it. So now coming back to the point, what had happened, you can see that the price actually swept this major level again. So first sweep was there and the second sweep is over here. Okay, so this changes our perspective. This changes the perspective. How? Because what had happened from here, this major low or this major low or high will be cancelled out, and this will be regarded as your single leg in the market. So this leg will be this leg will be stretched towards this point, and this will be your new support in the market, and this will whole thing will be considered as a single leg in the market. And this all of these lower highs that has been created out over here, this will be regarded as a liquidity in the market. So if the price gives me any kind of buying opportunity from this level, what I will try to do is I will try to target all of this liquidity available over here, and this is what I have done over here as well. As you can see, while going towards the upside, while creating another support in the market didn't go just towards the upside in a panic or a momentum basis. The price first retested towards the downside and then moved towards the upside. So we'll be taking a buy entry from here, putting the stop loss something around over here, and you are going to target what? Above side liquidity in the market. This is how the liquidity can be targeted, and you can see in this particular trade we have achieved a risk reward of 3.8. Okay guys, so this is how you are actually managing your trades. Even if there are some stop losses in the way, that's okay. You have to accept it and just move on, because the next opportunity is waiting for you. If you would have been regretting about the stop loss, or if something thinking about the stop loss, then there is a high probability that you'll be losing the next trade, or you'll be messing up around with your setup and again and again. Okay, so this is one of the big reasons that many people are not profitable till yet. Now from here, what we have to look is we are still in the right downside direction only, and what we are looking for here is that the price created another resistance from this level, and we are looking for a downside direction only, and that what had happened over here. As you can see that the price tried to move towards the downside. It tried to give us a pullback, but you can see that the price is not taken out the high of this candle. That's why we cannot consider this as a pullback, and this is just a small, you can say, momentum, or you can say a single leg in the market. Now looking at these two legs, this is the buy leg, this is the sell leg. What we can see is that the price is actually still in the bearish direction, and we are not able to take towards the upside. So from here, what did happen in the market? Price started moving towards the upside. Price created a higher low, a higher high, again a higher low and a higher high, and then started moving towards the upside, giving us a chalk. You can say that the price has taken out this major chalk in the market, or major external liquidity from the upside from this major chalk. So first price did what? First price break out this level and then started moving towards the upside again. And again, you can see this is not a pure chalk. This is what? This is just a sweep in the market. So this will be regarded as a sweep and not a major chalk. So we'll regard it this, and this will be considered as what? This will be considered something like this. So price will actually, what have happened over here is that the price has shifted the major support from this level to this level. So from here, again, we are trying to be bearish in the market. We are still looking for a bearish trade, because the price has not given us any kind of confirmation in the market that the price really wants to go towards the upside. So what did happen from here? The price started moving towards the upside and then finally tried to give us a single leg towards the downside. So this is how the price action created. The price gave us a single sell leg in the market, and then finally what did happen? The price again tried to do what? Try to give us a higher low in the market, from where we can take a small buy over here and put the stop loss over here on the previous candle, and then target 1:3 over here. Okay, if you will see that the 1:3 target would have been done by already in just 3 candles. So 1, 2, 3. That means within 3 minutes you would have achieved another 1:3 target using the same concepts again and again. Okay, I'm not trying to use any other concepts or trying to use any other indicator. So as you can see, we are just doing live chart or naked trading in the market, and this is how we do do live trading as well. If you will see the live trading videos on our channel, the same live trading has been done, or the same concepts have been used while making real profits in the market as well. Okay guys, so this is how we have taken out the consolidation, and finally what had happened, the price gave us a breakout and finally moved towards the upside, continuing the consolidation, then again giving us a strength towards the downside and buy side. So what I've done today in this video is that I've told you how to be profitable in such consolidations. Many people are very much, you will see that many people are so much scared of this kind of consolidation in the market that they are not able to trade. And within these consolidation, I want to show you that with the small concepts or with the proper knowledge, 1, 2, 3 and 4 trades, right, and one trade with the SL, that was over here. So 4 trades right and 1 SL was over here, and the 4 trades we have generated 3% return, out of which in the total you can say we have generated 12% return in the market, and with 1 SL minus 1, the net generation is 11% in the market. So tell me, if this a consolidation really takes away your money, or is it your mindset that takes away your money from your balance account or your funded account? Okay guys, so this is how we have discussed today. So if you have any other further questions, you can put it in the comment box, or you can message me or WhatsApp me on the given number on the downside. Till then, sayonara. See you in the next video. Do not forget to subscribe to the channel, because we are coming with so much more conceptual videos that you will be very fond of. You will be understanding trading with me, and also hit the bell icon so that you can live trade with me guys. Okay, till then, hasta la vista, take care, and see you in the next video.